Okay, what's up, guys? Virgo BC, and we are going to be live streaming the Algorand transaction fees discussion today. So a lot of lively. I put a little Twitter thing out there and a lot of lively comments, and I think we'll have a few seconds, so we'll probably look at that. It's always a little bit of a scramble in figuring out how much lead time I need to set up these streams because there's a bunch of stuff you got to do. If you do it through OBS, there's a bunch of stuff I got to do on the back end, so I usually have that little lead time thing going on there. So, how's everyone doing out there today? We're gonna have a really good. This is gonna be really great. Last time we streamed a space, it went really well. People really enjoyed it. I think there's a lot of interesting things to talk about in this space, and it's interesting. A lot of people think they shouldn't raise fees, and I'm not so convinced because I haven't really heard a lot of convincing arguments to the contrary. The one argument I can think of is how it will affect businesses building on the blockchain. Will that be too much? Will that be too expensive for them? And we will see. So, got a couple of comments coming in. I got Squilliam on Twitch, and I might respond in here just to say, top of the morning, good to see you. This is a very nice topic of discussion. Absolutely. And just type in a little comment for the Twitch algorithms. I don't know if that will help. And I'm going to go back to YouTube. But yeah, we'll be responding a lot of times. So during these streams, I will respond. Via the chat instead, so we don't interrupt the discussion. And Michael Orr, welcome here, says, sorry, off topic question. Where do you get your hats? Do you have a shop for your channel? I do. This one is from Dubai, from the Decipher 2022, and that's a long story. I probably running out of time to get into that, but basically this is the hat you got when you attended. It's a little probably a little dirty. I usually get comments to clean my hats. I wear them a lot. I do have one. There's a shop where I have my hats, and I'm kind of working on some projects. Working on some projects with some other creators to kind of do like a merch line. Still kind of working out some of the details. I might be doing one with Marcus. That will be really fun. So I'm hoping that one works out. So we'll stay tuned for that because I've been kind of unhappy with my merch, to be honest. I want it to be better. So I thought it'd be cool to have some of these NFT creators in the Algorand space, and then maybe eventually in other spaces to kind of do like a Frugal BC line, so to speak. The problem early on is a lot of them look too much like me. I don't really want them to look like me. I want them to be like maybe hint at me a little bit. So we'll see going forward. By the way, Squilliam, I found out I can. It by default it erases your videos after the stream, but you can set it so it saves them for a while. So I've figured out how to do that. So now these streams will live on a little bit. Hopefully that will help grow the Twitch channel a little bit. But otherwise, YouTube's still the main thing here. And like I said, I'm kind of choosing between Twitch and Kick. Welcome all my Kick people too. Welcome to the show. Michael Orr says, sounds good. Throw some Monko stuff on there. The art is cool. Yeah, definitely one I would like to work with, and I'm sure they would. I think what I would rather, instead of making a character that looks like me, that's not really what I want. I would rather it be like their character, but maybe they're wearing a Frugal BC shirt or something like that. In fact, that's kind of what we're talking about with Marcus, is having Marcus holding up a banner or a shield or something with Frugal BC on it. And then it has to be kind of like an icon, so you can put it on a hat and a t-shirt. I was working with I might reach back out to them. I was working with what is it called? That bread one. You know what I'm talking about? Looks like a bread. It's really technical here. Squilliam with the flame hands. I like it. I like it. I can't think of their name. Well, I can look it up maybe. Hold on a second. Where's my messages? I just gotta like moon boots. Breadhead, the breadheads, yeah, because I really like those breadheads. Like I said, I just don't want them to look like me that much. Oh shoot, I lost my spot here. Here we go. So the space will be starting in about 5 minutes. Meanwhile, actually, maybe I'll just make another tab here. let's start erasing some tabs too. We'll just take a little look at what people have said so far. Like I said, I'm not super convinced that of what I hear from people saying. Sean Vogel says mass adoption incoming. Heck yeah. I post sometimes says FBC with a mark. Yeah, I've long said that I will never create a coin. So if you see a coin, it's probably not mine. I check with me first, just to be clear. you guys. No, I'm not making. Dude, a coin. You know what? Making one of those meme coins, it's a lot of work because you got to like constantly be here. Let's get this set up here. You have to basically be constantly memeing about it to keep the price up. I've seen what, like Monka was doing that a lot. You have to really go crazy. And yeah, nice little audience coming in here. I'd like to see it. Yeah, let's see what people said so far. Like I said, the space is starting in about 4 minutes, and it usually takes a little while to. Orange said their Discord is kind of divided on the issue. Looks like a little heavily towards keep the same. I mean, it's so unbelievably low that doubling it would. I just don't think it would have much of an impact. David said spending is the problem, not revenue. I think it's both. Like if you have a business, you want, you have to be careful. You have to be mindful of your expenses, but you also need to bring in more revenue. So it's you wouldn't grow your business by cutting expenses. It's good to be mindful of them and not be overspending, but at some point, if you're just cutting your spending, you're kind of cutting yourself. You're kind of short-sighting yourself, so to speak, I guess is a good way to put it. So, and then assist in the marketing of revenue projects built on Algorand. Well, that costs money, so that's increasing your spend, not decreasing it. And he replied, he said, precisely. Yeah, so come back by the way of fees. So I think it's still fees based, So why not increase them? Gurray Accent says hi, hello, welcome. Buddies buys says double it, and then foundation hopefully doesn't have to sell for funds. I think they still would, but I think it would be a step toward sustainability. Let's see, max impact of fees increase to builders. Well, that's what I want to know. Consider that the fees have already doubled since October when algo hit 10 cents. Well, yeah, true to an extent, yeah. Yeah, that's a good point. This is actually a good point when considering how close are we? We're not going to be able to get through all of these, but when considering the impact of fees increases to builders, it's interesting to consider that the fees have already doubled since October when algo hit 10 cents. And if algo 100x's in price, fees will 100x too. It's a good point. Right now it's low because the prices are low, so that's an important factor. Squilliam says 100%. The meme coins, there's a lot more that needs to be sacrificed than most people would want to deal with, literally and figuratively. You're taking the right path, we like to imagine. I appreciate that. And hey, listen, I mean, if there was a way that it made sense to do it where it wouldn't be scammy, but also I wouldn't have to just be like, buy Frugal BC every day. Algorand in the chat. Hello. Welcome to all you guys. Looks like it's gonna be kicking off pretty soon. Hasn't yet, but coming soon. By the way, I love that Fisherman is leading the conversation on this stuff. I think that's awesome. Yeah, big fan of him. And as you know, his company, Non-Fungible Domains, which you see right here, they are a sponsor of the show. So big shout out to them, as is Marcus Ferilius, and we love them too. And that's a meme coin I can get behind just because they're doing such cool stuff, It's not just like I created a meme coin to create a meme coin. It's like I'm trying to create this, trying to spread the word about Stoicism, which I think is cool because I'm a big fan of Stoicism. Chat is talking with each other too. I like to see that. So I don't know how long the space is going to be, but it should be a fun one. And before we get started, you guys hadn't hit that like and subscribe button. I hope you'll do so. Oh, here we go.
I can play music, but then it sounds like shit. So thumbs up or thumbs down once I put my phone near the speakers, and just let me know if it sounds like shit.
Yeah, it looks like it's still kind of kicking off here a little bit. Some thumbs down, they're not liking that. Quite a few people here. Yeah, so it'll be really interesting to see what people have to say. I was debating whether to weigh in on this one, but I'm not sure I have a lot to pretty straightforward on this, I think. And
I saw some thumbs down. Okay. I need to figure that out. I don't know how people play music. I'll figure it out eventually. If anybody wants to come speak, please do just request. Happy to get you up. I don't think we're going to be lucky enough to get Algorand Foundation people in here, but I would love to be wrong. But yeah, I think this will mainly be a community discussion. And then we'll probably see the Algorand Foundation come out with their own thoughts on fees. But yeah, I think it's good to get some consensus among the community, you know, what we should do. And I have some questions ready. So if you guys, like, if anybody wants to come up here and just ask questions, I have like a load of them to try and just kind of, yeah, guide the discussion. But I see Greg came up. Welcome, Greg, GM.
Hello. I have one question. How are you?
I'm doing okay. How are you doing?
Pretty good. Just chatting, to be honest. Excited to maybe start finding some solutions to, I think, fundamental problems that we have had for many years now. It would be nice to have like a pointer at least.
Definitely. A lot needs, I kept saying this the other day, is like a lot needs to go right at the same time. You know, it's like not just one thing, it's like so many things all at once. So people try and deduce it and they're just like, oh, you know, changing transaction fees won't do anything. It's like, okay, that alone won't do anything. I agree with you. But it's part of like this bigger picture of, you know, getting to sustainability. And so I think it's like super important, you know, all these little things.
Yeah, same. And there's also not that much time left. Like, if nothing changes in the next, let's say 2-3 years, I don't see how this entire network can continue. To be honest, so it's pretty much now or never.
It definitely feels make or break. Like, yeah, like you said, the next year or two. But yeah, Crypto Trainer, welcome to the stage.
Hey, what's up? Thanks for letting me jump over here for just a second. You know, I don't necessarily come from a super technical background, and so, you know, I thought this might be a good forum in this community discussion. And you're kind of alluding to it a little bit, but just like level setting us like in what the problem actually is. Like we're talking about what may or may not happen with transaction fees, or what should happen or should not happen. But what's the actual problem that we're trying to address through this solution? You know, whether transaction fees are increased or not. You know, I know we were talking about sustainability of the network. Obviously, that's a huge issue. But like, what? I guess I'm just trying to ask the question of grounding everyone in what the actual problem is that we're trying to solve here.
Got you. Let me try and give a high level. So the network has costs associated with it, mainly validator nodes, relay nodes, and then all the shit that goes on around the ecosystem. So like the social stuff, marketing stuff, administration stuff, compliance stuff. Like there's all these costs associated. And they're not super clearly defined, like who pays for what, and you know, how you continue to pay for that once the foundation goes away. And so when a lot of people talk about sustainability, they're only talking about like validator nodes. And so that's a pretty clear cut kind of like example of the network
Hey, thank you for the super chat, RL.
There's all these people running validator nodes, right? And they pay for those nodes like they have an electricity bill that they pay for those nodes for. So like if you're only earning, say, 30 cents a month by staking, right, then it's not covering the costs associated with the validator node. And so it's essentially like the person running it is doing it out of their own they're essentially footing that bill. So there's lots of different ways to kind of think about sustainability, but really when we talk about transaction fees, it's more of an issue of like, okay, we're doing the actual net income of this chain is like $500 a day, and we're trading at like $2 billion market cap. So if you were to do like a cash flow analysis of this, like standard valuation TradFi kind of thing, you'd say, okay, it makes, X amount per year, you attach some growth rate to it, and then you discount back based on, the risk-free rate. And if you do that right now for Algorand, like the PE ratio is insane. Like you're essentially paying like $4,000 for $1 of Algorand earnings. So there's multiple different ways to think about this. But like the hard costs that we need covered, to actually make sure that the chain continues, those are like the real costs that we need to figure out. So that's mainly, ensuring the validators are well paid, and then ensuring relay node operators are well paid. And then I think there should be another bucket for like public goods or builders. And I think that needs to be covered via transaction fees, but I won't get into my personal opinions yet. How is that?
I think that's a really great level set. I just come at it from that perspective of, ensuring everyone here is kind of speaking the same language, and maybe we all are. I had a pretty strong understanding of a lot of things that you outlined there, but I worry too much just based on experience I have of we worry so much about solutioning something and figuring out what the solution is without actually understanding what the problem is. That can get you in a lot of trouble sometimes. So I really appreciate that overview there.
And yeah, I just want to put out the call to anybody in the audience. If you guys
That's a really good point, by the way, because this is a huge problem. And I love that I'm going to have to dissect his analysis of discount modeling, because I've been struggling to come up with one. So we're definitely going to have to look at that.
Action in general is an item in this discussion, because if the price action was better, and this already has happened in the past, where for example, November, December last year, a lot of action happened once again, and I'm pretty sure that most of the projects once again became profitable. So I'm wondering if remating the price action that has been pretty bad is also a part of the discussion at all, or do we want to focus on solutions that are mainly for finding revenues to node runners and so on?
I mean, I think it's pretty important. I mean, you saw a bunch of people on Twitter speaking about like, okay, can we just reduce the costs? And so I think it definitely is an important discussion to talk about, like, could the Algorand Foundation sell less algo, and then that lead to price appreciation, which then, helps this whole thing. And I say 100%. Like, it's a massive factor. That's kind of like the ultimate metric is price. So, and also it does affect sustainability, as you said. If we're doing 1,000 algo in fees a day and it's only worth 20 cents, that's $200, right? But then, yeah, so it can definitely make a massive difference if the Algorand price goes up. But not to get into a tangent, I want to welcome Simon and Ludo. What's up, guys?
Hello.
Hello, sir.
Yeah, I have quite important point. Like if foundation has $50 million on the account, perhaps it can be sustainable just from the interest of this money, right? And all these small fees that are generated are basically not important in this case. But in the transparency report, I haven't even saw like what are the expenses of the Algorand Foundation for the employees and stuff like this. So it's pretty difficult to say.
Yeah, I mean, you heard me recommend this to Stacy as an idea of like invest that 50 million in treasuries and then just use the yield to pay for all of the expenses. But she said that would need like a 95% reduction in headcount or something. So like,
Yeah, I think the
I mean, they're
reduction of the
spending.
Algorand Foundation is going to be either way, right? Because the foundation is like I don't understand like how much the fee should be increased so that the foundation is sustainable. But we need the Algorand to be sustainable, not the foundation.
Well, see, the foundation is like the administrative arm of Algorand. Like, so if the Algorand Foundation went away, there would need to be a new kind of administrative center. Like, we can't just say, oh, they go away, and then marketing, administration, all the contracts they have, all of that stuff goes away with them. You know what I mean? So, like, they do play a massively important role. And so, like, if they are going to go away, then those systems need to be set up so we're like ready to pay for those things and run those things ourselves, you know? But yeah, I hear you. It's like there's okay, so there's the raw costs of the Algorand Foundation, taking away governance rewards, taking away staking rewards, all that stuff is like $11 million a year, maybe 12 or 13, excuse me, per quarter. So like 11, 12, 13 million per quarter, somewhere around there is like operations, R&D, all the infra, all the relay nodes, etc. So that 50 million only will last like, 4 or 5 quarters or something. So it's not like it sounds like a lot of money, but it's not for them, pretty much. Simon.
Yeah, but then we must really speak about cutting the cost of the foundation, and these costs are not transparent, right? They were not mentioned in the transparency report.
Yeah, the line items could certainly be more detailed. Yeah, we kind of have to guess what those line items go towards, but I want to let Simon go. Simon, welcome.
Hey, everybody. So yeah, I want to circle back a little bit to the earlier discussion where you kind of defined what the problem is that we're trying to solve. I also think it's really important that we all kind of understand at this point, like at least based on all the conversations I've read and I've participated in, that there will be like a multiple part solution to whatever the final solution will be. So I think it's really important that we define, or at least try to come to the same page on what the, let's say, state of the ecosystem is, let's say, in 1 year for this solution to actually be a solution to the problem, right? So I hope that's kind of understandable and all. But for example, right now we are at, I don't know, 100 transactions per second. So we should assume, let's say, that there will be, 1K transactions per second within a year, and then work on getting to these 1K transactions per second, like through different channels. And let's say we decide to increase the transaction fees, that's fine, but it has to be part of the formula that assumes 1,000 transactions per second, assumes that many new people being in the ecosystem. Because if we're trying to solve a problem without knowing the state where we're at, or a state at which the solution will work, then it's kind of pointless it's just a guess game. And that's my take on it.
I think that like the final solution, in my opinion at least, should be that the network is the source of revenue, and that source of revenue is enough to pay that for everything that is necessary to continue running the network. So right now, both the activity on the network and the fees are basically negligible. So something needs to happen whether it's basically either the costs of operating the network goes down or the revenue that the network gives goes up, because otherwise we're all waiting until the foundation runs out of algo, and then what happens then? Nobody's gonna be charitable and just pay all this out of their pocket, and I think most people don't want to find themselves in situations where the foundation finishes, their amount of algo and says, "Okay, guys, we're done. Good luck," and that's it. So there needs to be a solution where the network can continue to work without the continuous selling of algo to sustain it.
Yeah,
Yeah, I
for
don't agree with this point because there is big chunk of money basically um, uh, from the foundation. So to be sustainable, you don't have to just collect money from the fees. You can collect it from the sale of the algos, which is currently Algorand Foundation doing. And if you invest this like in good terms, then you have some interest on this money. And if Algorand Foundation wants to stay here a long time, they will probably need to make money on this interest, including the fees, uh, so that the whole thing is sustainable. And I think we also need to split two things. One is if, for example, we want the foundation to be going on, and the second is the network security. And the network security, we don't have to fund 4,000 servers around the world to um, to keep the Algorand going, right? We don't need to fund all these costs associated with this. And the foundation did cut the relays count in April in half, for example. And if we don't need basically so much decentralization to pay by the network fees. And if we collect today like $500, I believe that the network is already sustainable because you can run few servers and with the but with this within this budget, and the network is okay. The problem has the foundation, which doesn't add up with this cost of $10 million per quarter. Like, we are not going to collect these on fees.
I mean, if I just jump in really quickly, so like what you're assuming there, Ludo, is that the foundation will have the money forever to supply it, which is not the case. Obviously, the project you're suggesting can work for a certain period of time, but afterwards it's gone. And we're trying to solve the long-term, sustainability of the network. And your solution kind of expects money to be there.
Yeah, but I'm saying that from the interest you can fund the inflation plus any expenses that will be there.
This
Like,
is not possible.
I
If the foundation sold all the algos that they have today, they would have 300 million, and the best investment that you would get was around 10%. So they would have 30 million a year. And as it currently is, they spend 10 million, over 10 million a quarter. So they're like 10 million short yearly from interest. Even if they sold everything they have currently and used a very good investment strategy, it's just not possible.
and I don't think that the current price is good for selling the algos, right? Like, we
Yeah,
are
but
almost at
who's
the
gonna buy it on
market
a higher
bottom.
price? Like how are you
Like,
gonna make the price higher for them to sell this much algo? If they sell,
when we
the
get
price
to
only goes
the
down.
market supply, and there will be no more algos to be distributed, then the price will go up. It's basic
Yeah,
Well, I
economics.
think
but
we should challenge that. We should challenge that because that's kind of what we're talking about. Is like if foundation rewards stopped right now, the validator count would drop dramatically. I don't know how dramatic, but it would be bad. because the actual earnings that you would receive would be literally pennies, like pennies per year. So nobody is going to run a node for pennies. Like it's just not going to happen. I mean, maybe there are some altruistic people that have businesses on the chain and stuff, but yeah, you're talking about like a mass extinction of nodes, you know, and that does make the network like weaker substantially. So I do
Yeah, but
think
it's
like,
not
you know,
bad
that
thing.
matters.
Like we must reduce the number of node runners if we want to be sustainable. Why do we have so comfort that we are the best decentralized network, and still it doesn't show up in the pricing, right? Like if the price of the algo would be like 20 times higher, it would be like something different.
Yeah, I mean, it's a massive if, you know, if algo was 20x higher, like, yeah, then I agree with you. You can outrun sustainability if you get a pump in the price. Like,
No,
I
like
agree.
it's not if. I don't think that's it. It is if. Like at the moment, the network is sustainable without the Algorand Foundation at the current price level. Do you
I
agree
mean,
with this?
no, I don't agree with that because like the entire node pool right now is based on Algorand Foundation giving consensus incentives. Nobody would be running a node if there was no reward. And effectively there is no reward if there are no incentives. Like because the fees are so negligible. And I
Yeah, but
agree with
even
you. I
you
agree
said
with
that
you.
the
I agree with
collection of the
you.
fees is already like $500, right? So
I
if
I
there will
agree with you
stay
on
only
pairing
like
relays.
five participation nodes, then the network will go on.
Yeah, 5 participation nodes. That sounds fucking fantastic.
Yeah,
Like
but
that's
even
horrible.
in this scenario, the network will go on.
Yeah, and the price of algo will be 0.000001. I mean,
No,
like yeah,
that's if.
But also, like this is a obviously a bad situation, but I kind of agree in the fact that the technology and the level of decentralization doesn't really matter in regards to price. So if we went to 5 nodes today and this wasn't like hugely advertised as a potential to short algo and so on, I don't think we would change much in price because these metrics are purely technical.
I think
For the record, can I? I am running the Aramid chain, which is AVM based chain, and we are running it on I don't know 20 nodes, and everything is running fine. So
Yeah, but you could
yeah.
shut it down today if you wanted to, and that's not the point of a network.
crypto trainer,
Yeah.
go ahead. I think you wanted to say something.
Yeah, I did. Yeah, I just wanted to. I mean, I'm trying to. I'm going to pivot a little bit if we can to like. Yeah, I don't want to just talk about the foundation and if price is higher or lower. Like, sure, that stuff matters, but like, we're here to talk about the transaction fees specifically. And so, like, I feel like that's why I brought up initially, like, what is the problem we're trying to solve? Because underlying some of the things that are coming out right now, like, if there were more applications that were driving stronger usage in the network. I don't know if the transaction fee discussion will be the same, but I want to shift it and just and see if we could take it in this direction for folks to understand like what's on the table in terms of increasing transaction fees, like how much are we talking? And given the usage of the network today, if we were to mirror the usage of the network today, a year from now, 2 years from now, and we were to increase fees by a certain multiplier, I'll lead it to the technical folks here to let us know how much that might be. Like, what's the potential outcome? Like, if we were to increase transaction fees, like how much will we need to increase them by? What impacts do we see downstream of that? I kind of want to drive it back to the transaction fee discussion.
I just want to like point out that I don't think there is like a golden scenario. There's no like, I think we just need to make it better, like improve towards more sustainability. You know what I'm saying? Like, I don't think we can say, oh, this is exactly where we need to be on fees. to make it sustainable. Like, I don't think anybody would ever be able to pinpoint it, and especially because it's so algo price dependent. And so, like, if algo does really good, like we were saying, it's like you can kind of outrun sustainability for a very long time if your token's pumping, and you can kind of just pay for all that shit out of selling the token, you know. But yeah, I mean, the idea is on the table. At least Algorand Tech put this out. Gary Malouf tweeted that even if you 100x the fee, it would still be far from sustainable. And so that would be, you know, like a 0.1 fee, right, per transaction, which in my opinion would be quite high, because now we're like substantially higher than, you know, a lot of the L2s and a lot of our competition. So that's one idea, is just raise the base fee. So, you know, a transaction now is 0.1 algo to send, you know, lots of ramifications. And then the other ideas are you could add a priority fee, which is essentially like a skip the line kind of feature. So you could pay extra. So the base fee would still be 0.0.
Yeah, Cosmos has this, by the way. You can choose from slow, medium, and high.
Block. So to try and get to like the front of the block, so your transactions execute before the people below you in the block. That's another idea. That would raise the aggregate amount of fees collected without changing that really nice, cheap base transaction fee. And then there's another idea, which is change the issuance of algo. So instead of having a fixed cap at 10 billion, institute an inflation. And then there's another idea, which is change. What's up?
Hey, Crypto Trainer's dropped down. Does he want to come back up?
I don't see him requesting, but more than welcome if he does want to.
I've shared my view on this before, so I won't. But I think it's important to basically look at the people that contribute large volumes of transactions today. And the main standout one is probably TravelX, right? And then say, are they price elastic or price inelastic to changes in transaction fees? And if they're not, it gives me, well, I haven't said this bit, but it gives me more comfort in changing. The next thing that I would do is quantify what different levels of costs could be for different use cases, and understand if where we're pricing ourselves out, we're happy to price ourselves out of those use cases. And then after those two initial steps, I would be open to this conversation. But I think the pricing out is important so that everyone is aware that we are potentially going to get too expensive for specific industries today.
Yeah, that's actually really good. I do want to give a high level guiding principles. Like, I actually think, as far as transaction fees go on the whole, you want the lowest transaction fee possible. Like, on a per transaction, per user basis, you want it absolutely the tiniest possible. And that's because it's like the least rent seeking, right? Like, we all are mad at these intermediary banks and stuff for taking like transaction fees, large transaction fees. Like, the whole goal of crypto is to disintermediate, right? And essentially allow P2P transactions with like no middleman. So I totally believe like the less transaction fee, the better. And so I don't think just rushing to like, oh, let's boost transaction fees and then that boosts revenue. I don't think that's the right way to think about it because of that guiding principle. And getting back to what you were saying is like use cases. Like, you know, there are use cases that are possible with fractions of a cent transactions that are not possible with 1 cent or 2 cent transactions. Like, they will go to an L2, they will go to a database, they'll leave. So there are some that are price elastic, right? But I don't really buy the argument that like if you 2x the fees, travel X leaves, because that means like if algo price 2x's, they also leave, which we all want. So that seems kind of like a questionable argument to me. But I do agree on the principle that we should not raise fees because it's the maximum good, you know, and it makes possible the maximum use cases. But I don't know whose hand went up first, but AP, I want to let you go since you haven't said anything yet.
Yeah. Good evening. Yeah, good morning. So my thing is about the inclusivity actually for the blockchains. I was thinking about like Ethereum when they launched maybe in 2014 to 18 or 19, like they were very popular when compared to Bitcoins, like transaction fees. Ethereum's transaction fees was much lower. Then may came the 2021 where everybody just turned the table, where like it became very expensive. So things can change maybe in 4 to 5 years. So the priority for us first should be in increasing the TPS of the chain by increasing the adoption. That should be the first priority. Yeah, we should certainly continue the discussion on different fronts where how we can increase the revenue and uh, make the chain sustainable. That's very important because it takes time to come to a consensus. Uh, but yeah, see here transaction fees is calculated in US dollar, and there are other 150 countries whose uh, currencies are not strong as US dollar, and there are like maybe like most of the people live in a country where like in the most of the population is concentrated in countries where the their currencies are very low when compared to US dollar. So for them, yes, even a cent will be a much more bigger amount. So bringing those people to chain will become difficult if transaction fees are higher by say 10x, which was the popular opinion that I have seen in Reddit and many other areas. But my thing is that first we should think about increasing the TPS, and then as a last resort we should think about maybe increasing the transaction fees. That's my point. Thank you.
Thanks for sharing. I do want to point out though that for the past 5 years we have been focused on increasing transactions. Right? Like that has been our focus for the past 5 years, and we're now here. So it's like to just say, oh, we just need to focus on more transactions, like more things going on chain. It's like, well, yeah, obviously. I mean,
So
like if we could, you know,
I think we focused on DeFi from maybe like 2021, 22, and then we failed in maybe getting the transactions there, and then we moved to RWA where we have got very good use cases. So I believe that it has only been 2 years since we started trying.
yeah, I hear you. I mean, I think the entire goal of DeFi and all those things is transactions, right? It's like all towards just getting more activity on chain. And like all of those attempts at just getting more transactions on chain haven't really like, yeah, they've paid off some, but you know, like Planet Watch is a good example. Like we paid them essentially to put transactions on chain. We stopped paying them, they stopped putting transactions on chain. You know, so like you need actual use cases that are beyond just being subsidized, and you know, quote unquote sustainable businesses that actually produce revenue. And yeah, JD, you go, and then Simon, you can go after.
No, jump to Simon first.
Okay, Simon, go ahead.
Thanks for that. So yeah, there is one very important question that we must kind of ask ourselves and answer it before, you know, we decide to even, you know, think about increasing the transaction fees. And that is, you know, how big of an impact will this change have on the ecosystem? You know, just think back on the, you know, when Algo Explorer went down, when my algo hack happened. Like, how many people left the ecosystem because things didn't work? And That's probably going to happen, at least to some extent, if there is this sort of a change to a protocol, at least in certain implementations. And I don't see any of the big players like being vocal about it. I don't know, maybe there are conversations happening behind the scenes. Like I know I see Patrick in the audience, we have Greg here, like maybe someone from Tinyman could chime in. But the thing is, like, if these big platforms don't roll out their updates quick enough for their products to remain functional, is the increasing the transactions fees actually worth it? If the half of the ecosystem dies and we lose even more users.
Yeah, I mean that's like, yeah, the whole thing, right? You got to look at everything. Like everything has to go right all at the same time. And so I think like people are focused on different things, and I agree with you that we need to like really focus on maybe just transaction fees for now, because like it's all so connected. But yeah, it's good to just view like, okay, if we make this one change, then what are the pros, what are the cons, right? And I think at least raising the base fee has a lot of potential cons. Like it strictly due to the large volume people like TravelX and Hasab Pay, like really raising the base fee to X, but then losing one of them would be a huge net loss, right? So like that's why I err on the side of priority fees, where it becomes like an optional thing. So those users, that 0.001 is really important for, we don't lose them, but we raise total aggregate fees because there are users willing to, pay to get to the front of the block for like MEV or ARB purposes or whatever. JD, what's up?
Yeah, cheers. I've just pinned up Gary's note from yesterday. Yeah, well, two days ago now. I wish he would have shared an opinion, if I'm honest, Fisherman, because the statement that he's made is obviously factual. But like, if we look at the network costs, maybe we don't have full transparency of what the network truly costs. Firstly, maybe that's only someone within Inc or Technologies that can tell us. But today we obviously have relay nodes that are a core part. And is the profitability of the chain, are we hoping to get to a point with transaction fees where we cover relay nodes, or will those continue to be covered through structured selling, or are we fully migrating away from them? I think questions like that also need to be answered, because where are we trying to get to with total revenue coming in for the chain, and then how do we best get there is probably a mixture of both increasing transaction volume and also increasing fees.
For sure. If anybody is here from Inc or Foundation and wants to give us some color on this, that'd be great. Because yeah, I certainly don't know, the internals of like who exactly is paying for what, and it would be great if we could get that information. Inc is a private company, so it's like not really like we can demand too much from them. But yeah, Foundation, I think that would be. I said this on the last space that this might be a good thing to ask for because it's so actionable. It's just like, could you please put clearer line items on the transparency report so we can see exactly how much like archival nodes, relay nodes, etc. all costs? Like what what are we paying for those? Because we actually don't know.
Well, I think John has shared them before, and I'm going to pluck a number that stands out in my head. The relay nodes cost between like 2.2 and 2.8 mil per year at the moment, and they're paid by AF. And the existing contract, maybe you know this one, Fisherman, I think it runs to 2026.
I have no idea, to be honest. Ludo might know this though.
So I think AF has paid for relays up until some date within 2026 26, and I think it is over 2 million per year. That's the cost of a relay node, or
Got it.
relay nodes as in all contracts. Ludo?
Yeah, so the relay nodes, like there is something like 60 relay nodes at the moment, to my knowledge. And each of them, I assume, costs something like $400. So it's 300 times 400 times times 12 is $1.4 million per year at the moment for this year.
Ludo, you don't happen to know archival nodes? Like, you don't happen to run one of those, do you?
Actually, I still running the relay in the archival node, in the archival mode, but I'm not like I'm not the relay runner anymore because like the foundation cut in my last in April of my nodes, and I think Urto is running most of them, if not all.
Got it.
Can I ask quickly, Ludo, was the 400 number that you quoted there, was that the cost of actually running and not the bill that was paid by AF? So there'll be a markup due to their importance.
Now you can run relay node per the lowest possible at the moment is something like 50 to $100, I think. And this is basically what the foundation pays maximum to the relay node runners. I assume, because I didn't get through this competition, and my quote was something $300. So I assume that everybody else is running more efficiently.
Got
Which
it.
is, so it's costs like that that exist, Fishman, which I think need to be made. The decision needs to be made if we're trying to cover them or not within this whole
And
conversation.
I think that in long term there will be no relay nodes, right? Because you will just need to have some DNS bootstrapping nodes, and you can even fetch it from the history of the current participation nodes. But depends, like if I haven't seen the proposal from the for the participation nodes, because you still have the networking issue when your node is behind the firewall. You need to make the connection out, right? And if every participation node does this, then the network has the issue. And so I wonder, like, if it's going to be somehow incentivized if you run public participation node or something like this. But I haven't seen any progress this way.
Yeah. Without getting into like the super details of the nodes, because honestly, I'm not too familiar with like all of that. I do think, like, thinking about it as a whole, of like, okay, there are of like, okay, there are these costs, putting validators aside and just thinking about the relays and the archival nodes, because like we will need to pay, right? They could run their own archival node and foot that bill themselves if they have, maybe their liquid staking provider, or maybe they have a ready pool or whatever, and there is some reason for them to run it themselves, so they don't need to rely on an indexer or somebody else. Like, but putting all the technical BS aside, it's like those are real costs that we need to cover. Like the chain needs to generate revenue above and beyond all those costs. and we could cut costs. We could do things to the network, like essentially get rid of relays, you know, and we could do that kind of stuff. But just looking at it as like very simple income, you know, minus expenses, like what do you know, where are we? And that's what essentially the Algorand inflation or the Algorand selling is paying for, is like all that, you know, that big negative. It's like if we could increase the top line, like more revenue, right? And then whatever we end up doing on the cost side, like hopefully reducing, then we come out somewhere closer to sustainable. And that's yeah, the high level.
Yeah, but I again think that you don't need to run like 5,000 participation nodes, right? And
No, you don't.
yeah, and in the like there is definitely some path to do to allow like P2P between these participation nodes, so these relays will not have to be there anymore technically. So
I mean, I think if you think about it technically, then you're missing like 95% of the picture, which is people invest in these assets to earn a return. Like it is like, you know, the network itself is like an entity that you can essentially invest in by buying algo and staking it. And then you earn the rewards of the network, you know, you earn the transaction fees from the network. It's like a very pure economic, you know,
yeah, but
situation.
technically, like these investors will never run the nodes, right? They will stay it at some existing solutions, like at my public participation nodes or Reti nodes or whatever, and there is one third solution for this, and yeah, like
No, but what I'm saying
it's
is you keep saying it's okay for there to be five five participation nodes. And I'm saying that is not okay. Like 5 participation nodes earning $10 a day. Who the fuck is buying algo? Like, what is the incentive to buy algo and stake it? Like, do you want a piece of that $10? Like, you know, you're gonna earn literally a fraction of a cent. Like that's the you know, these are financial assets too. Like yeah, it's a network and there's a lot of considerations like security with staking, which also in your model the security is quite low, right? Like
I think you needs to split the investment part from the protecting of the network, because like it doesn't have to be related. Like investors
yeah,
can.
no, I'm saying that. I'm saying like 95% of people when they think of sustainability, they think of like what are the rewards, right? What can I get for buying this and staking it and running a node? And like if that does not come out positive, then it is not a sustainable situation.
Yeah, but if you
Like
can, but this staking is pure APY, right? It doesn't. There is no other cost. Like you just put it to the Exalgo, for example, and you have like pure APY incremented each second.
the cost is opportunity cost. Like why would you stake for 0.0001 APY when you can go to Ethereum and earn 3% or wherever else? You know, you could buy a fucking treasury bond and earn 4%. I mean, like, why take that risk? You know, you should be paid adequately for putting your money at risk. Like, and I'm
Yeah,
not
and
saying that
this is
that's
collected from the network fees. So technically, the the price will go basically where it's going to be sustainable. If more people will be buying it, and it's going to make more APY there, then more people will buy it, and then they get the APY. They sell the excess, and the price will go down. And this is what's going on every time, right?
yeah, but I mean that is not a good solution. Just like let the price go down.
Right.
That's what we're
It's
trying
the
to
market
avoid.
solution. It's correct solution. There is no other better solution. The market should decide the number of participation nodes.
I'm not
depending on
saying we should dictate, oh, we need to maintain this 5,000 nodes, you know, all earning 7% a year. Like that isn't what I'm saying is like we need to accomplish this for it to be sustainable. I am saying we need to get as close to that as possible. And I understand that the market plays a massive role in this, but like we cannot overshadow that there is this entity, Algorand Foundation and Algorand Tech, that can change shit and make it so that we are more likely to get there, you know, sustainable. But more, you know, raising, I do believe the market solution is the best solution. It's going to happen, right? Like the market is speaking. 20-cent algo. And yeah, so I think the market's doing its job. And I think we just need to kind of see what we could do. Like the market 20, it's I could do to kind of get Algorand into a better situation, lower costs, raise income. It's like an income statement, you know, just raise revenue, lower costs, and would be in a, you know, better situation. It's not going to fix anything. There is like literally no silver bullet to make Algorand succeed. It's just like we can just make it better. I think long term, like if you talk about the security of a chain, there almost needs to be some sort of new issuance because like even there are a lot of chains that will probably face this issue, but I think just big picture there probably should be like a steady inflation rate of like 1 to 2% a year so that people are actually incentivized to invest their algo or their ETH or whatever. Because yeah, I mean this is like the whole theory behind the Fed and why they think it's smart to have an inflation rate. It's like if there's actual deflation, then nobody's incentivized to spend anything, and it kind of just would all get locked up, you know. So you almost want to provide a market incentive to invest your money. Yeah, Luda.
Actually, I think you're saying the opposite because, like the investors are not going to buy it because of the inflation rate, and the inflation rate by Fed is created mainly so that in real economy there are like salaries, and people are very unhappy with reducing the salaries, and this is the way to reduce the people's salaries without them noticing. And this absolutely doesn't help. Like if you are an investor, you want to buy a scarce asset. You don't want to buy something with the inflation. And I am very, very happy that Algorand at the moment has like fixed supply. And I am quite against this because like a lot of people has invested into Algorand that there is a fixed supply, and they are waiting for 2030 when the algos are going to finally run out, and the only market will like new participants in the uh, in the ecosystem will only have chance to buy the algo, and then the price will go up. And if we tell everybody that look, this is not going to happen, like the price of algo will dump terribly, I believe. So I don't think that even talking about changing this is very good. This narrative is very good idea.
Yeah, I think it's taboo for people to go from fixed cap to like dynamic. I think there's a lot of people who feel the way you do. So even though I don't agree with you, I appreciate you voicing that for the people. Because yeah, it's quite a divisive topic. And at least how I view it is like if you buy algo and you stake it, then you don't suffer any inflation, right? Like you are earning that inflation rate plus transaction fees. So it's kind of, in my opinion, a healthy dynamic for
Yeah,
for
but
the
you have to
ecosystem.
pay taxes, right? Because you have received some money, so you have to pay the taxes from your profit. So you
Yeah,
have to sell either way.
yeah, you're generating taxable income by earning this for sure. Just as you are staking and earning, network rewards. It's like the same thing.
Mm-hmm.
But yeah, I mean,
Yeah, and I think that the really sustainable future is when Algorand comes into its mind and starts to really seek the projects that generates the transactions on the network, because this is main thing that should drive the ecosystem further. Like it's very good that there is this this flight ticket company, but I believe they are quite small. But uh, everybody can see like what this kind of small company can do in the system, right? If there would be like many more ticketing companies, for example, it would be quite sustainable. Even for example, DeFi at the moment on Algorand is very small, and uh, like for example the concentrated liquidity AMM that we created is much more fees consuming that than standard AMM, because like it's much more technically developed solution. Like we hit the limit of the application size, right? For example, and um, if the foundation starts to support like or like the DeFi in the sense that there is still a very small amount of USDC, Algo, or Bitcoin on Algorand network, or for example, if there would be like um, um, for forex market made of the ASAs on the Algorand network, this would generate a huge amount of transaction fees just between the arbitrage opportunities or between the different pools, right? So I think that the long-term future should be that Algorand is open for new DeFi protocols, new uh, new stable coin issuers or whatever, and to make DeFi or more projects come into the place, and the the network fees would be.
I agree with you. Like focus on DeFi, get more transactions on chain. I think everybody in the space agrees. Like we are all aligned on that. Like where I disagree with you strongly is you keep saying we're already sustainable. That is not fucking true. Like we literally have at bare minimum 40 million in costs right now that the foundation is paying per year. Like okay, you cannot just say, "Oh, just don't pay any of that." Right? If you don't pay any of that, like literally everything just stops. Like there is no foundation, there is no marketing, there is no nothing. Like no
Yeah, but
developers are being
but
paid, no
technically the
protocol developers are being paid. There is no advancement. The chain is dead. It's like stops right there.
Yeah, I absolutely agree that at the moment we are not sustainable in the way that we should do it like today, like get rid of the foundation and I don't know, we don't have even power to distribute the staking rewards, right? So but what I wanted to say, that this bare minimum that we need to sustain the network is already basically there, but not at this decentralization level. And yeah, I agree
Yeah.
that.
Yeah, I hear you. AP, go ahead.
Yeah, there is one more point where the price actually, like in the last 4 years, maybe 4 or 5 years from the date of when Algorand was launched, the kind of inflation that we had actually, we are lucky that Algorand price is still at 20 cents. Actually, if I remember, like maybe in 2021, our supply was like 5.6 to 6. Now we are at 8.6 billion circulating supply. Next 4 years is going to be very crucial, where the inflation will be much lower, the supply, the amount of algo that will be sold will also be much lower when compared to last 4 years, but the amount of transactions that will be coming to the chain will be much higher. So the price appreciation has actually not happened on Algorand. If you look at like many other chains that has happened, I am hopeful that in the next 4 years, due to all these factors, there will be much more higher price appreciation, along with which has to be considered, and then we have to take a decision. There are a lot of changing variables which makes it difficult. Maybe like in the next 1 or 2 years, the whole discussion that we had here will become obsolete, and we have a new paradigm. So things are very very fast moving, and a lot of things, moving parts are there, which we have to consider. Even this is a very important thing which can change substantially in the next 4 years.
Yeah. I hear that, and I think that's been the strategy, right? Is hope. But hope is not a good strategy. It's like we need to do more than hope.
I'm not pointing that we should hope, but we have to do is that we have to consider that too. Maybe like in the next, whenever there is another discussion, maybe from the side of foundation on what should be done, maybe that discussion will be very serious by 2029, because by 2030 the whole algo will be in circulation, and by 2032 I think the distribution will also be finished. But at that time, I think the price has to also be considered, and then a decision has to be taken whether how we have to move forward with the transaction. Yes, but things will be changed. So that's also a point. Yes, but things will be changed. So that's also a point.
Yeah, go ahead. Welcome. What's up?
Yeah,
What's up?
I just had a very just drop down, which is that in all this discussion, I think that it's important to keep the difference between relay and participation in mind, because relay is sort of, you want a fixed amount, bare minimum, and the payment in there is almost software as hardware as a service. You're really wanting to make sure that there's enough people there running it and that they cover their costs and then make something on top of it. Whereas when I view what sustainability looks like for validation, it's more geared towards what is a reasonable APR to make on putting it up, rather than needing a fixed minimum, we want this many nodes. It's not about the cost so much, because the costs are very low to run it. Instead, it's more of an APR calculation. So just something to keep in mind.
Totally. Yeah. I mean, like a lot of what Ludo was alluding to is like how much technically does it cost, right, to just keep the network running? but like that's not what we're talking about. Like it's a bigger cost. There are more costs aside from just keeping the technical chain running, you know, with like 5 participation nodes. Like that literally equals algo at 0.00001. I hope you know. So it's like nobody, I don't think we should think that way. Like we have these resources, we have the Algorand Foundation, we have the treasury that they have. How do we use that to then boost the income to make Algorand more sustainable? Like saying we need to get to perfectly sustainable is a bad goal because like we probably won't be able to. You know, it's like they're like that's why I come back to the issuance idea of like, you know, even if we 5x'd the transaction, the TPS, and we, you know, 10x the price, like Gary said, it's like the costs are still not being covered, you know, and I don't know what costs he was speaking about, you know, again, I don't know how he's thinking about it. Would love to hear it, but yeah, it's just my take. Thank you, Gov, for coming up and sharing your thoughts.
One thing is that I'm not entirely sure if it even makes sense to discuss what to do with Foundation's treasury. I don't think Foundation is open at all for suggestions. At least that's my impression. So even if we come up with what to do with that treasury, I don't think Foundation is gonna take any hints from this.
Yeah, I mean, it feels that way. Like you know, I feel that way, but I know for a fact that they do listen. And I know also for a fact that if the community comes to consensus on something like strongly, then they don't really have too many options. Because like the community is pretty much Algorand. It's like if the community is all against you, you're like, what the fuck are you doing? You know, so I think it does take like community consensus and they will listen, but they will still do what they want, and there's no controlling that. So yes, you are right, but I just want to give the silver lining that I do think they listen, and then that helps, you know, impact the decisions that they make. And so yeah, the more consensus we can kind of come to, then I think it makes it easier to argue with them and say, look, the community is clearly thinking this, and you know, you guys are outlining something completely different. You know, I think it does help.
I think the best ideas that we can come up with would be ideas that would still work even if we don't leverage the treasury that the foundation has. Foundation can then enhance those ideas, but if we come up with something that entirely depends on how they use the treasury, then I don't think there's a point even in proposing this. So, for example, incentives for different things like node incentives, the treasury from the foundation helped with this, and that was a very good choice. But even if they didn't help, the incentives would still be a very good thing for the network. So in my opinion, any solution that could be found needs to also work even if there's no help from the foundation treasury side.
Yeah, I hear you. Go ahead, Luna.
Okay, I have one idea perhaps. What if we allow some kind of dynamic fee to be at some constant price per USDC or USD. So the main idea is that the blockchains, like the builders on the blockchain, wants to have like some sustainable budgeting, right? Like if you are doing like NFT ticketing, then you want to know the costs per transaction now and in 10 years, right? And if there is sustainable fee to pay for this thing, and it should be backed by it can be in algo, but the algo fees should be somehow constant, right?
I think
Then
you want fiat chain, and that is coming. So, but
yeah,
also
but
if you
perhaps the whole this discussion is about the fiat chain. Perhaps Silvio will then promote Algorand much more and not try to create like new layer one solution.
But
And
if you wanted to implement this in Algorand currently, there's no way for the network to know what the price of algo is, unless
that's
you have.
not true. Like in
You would have
AMMs,
like having
in
security of the network dependent on an AMM that runs on the network is not a good strategy.
I
I
think there
think
are
that
other issues with it
it's
too. Like it doesn't
it's
scale with
possible.
the network. It doesn't scale with the network. Like if the network costs were to rise in USD, which they will, right? Because USD is essentially a shitcoin that goes down. Like you need the cost to be pegged in something that is related to the chain, right? Like making it just
Make it
USD.
fixed to the gold price, but technically uh, technically it's scalable because like if there is going to be many more projects, the more is going to be collected, right? So
I mean it's not scalable in the fact that like the USD price will go down relative to the cost of running nodes and the costs
okay,
associated with the chain. Like those costs will
so
go up
let's go
over
with the
time.
gold price. Like the gold price is kind of stable anti-inflationary
But again,
asset.
like it's this peg that has nothing to do with the costs of running the node. Like the gold price moves completely independently of that.
I'm not saying now about the running the nodes. Like I believe the number of nodes is really the function of the collected fees. It's not really related to this issue. So
No,
if
but
we are going to increase,
you're essentially saying pay validators in USDC or pay validators in gold, right?
yes,
Which is not paying them in algo, which is the currency of the chain.
yeah, but technically you are paying in algo, but the fee will be will be in dependent on the quote of the gold.
You know, I understand like what you're saying. I don't agree that that is, you know, the solution. I don't think pegging it to any asset is a good idea.
Yeah,
Like
but the
that's
challenge here is that like if you are a project or bank or whatever, and you want to have like sustainable network fees for your whole project, and you want your project to be sustainable, and if the algo price will pump tomorrow like 1000x, then it's not going to be sustainable, right?
yes, but I would say to you that price pumping 1000x overnight has historically never happened to us, and I don't think we have to worry about that. Like, it seems
Yeah,
like
but
a crazy like reason to do something because of a theoretical 1000x. Like, I just
yeah,
don't
but
see that as a
technically we can set this constant of the stable coin price for the fee to be something competitive and and it doesn't have to be written into the stone, right? It can
no. It
like
does hurt.
move
It
a
does
little bit.
hurt. It does. Like if you say it is 0.01, right, USDC per transaction, what happens
Mhm.
when the USDC is devalued fucking 50% in the next 10 years? Now the
Then
transaction fee has gone down in real terms. The transaction fee has gone down. The aggregate fees have now gotten hit 50%. So even if we group fees, now they're actually earning less because of inflation and the USD being a piece of shit.
Yeah, but the USD will go down in relation to what? To the other assets, to the gold. So that let's make it in the gold.
No,
Gold
I'm
index.
saying in relation to their costs. Like in relation to their costs, the
To the
cost to run the
inflation, right?
node, the cost to run the node in USD will go up. The value of the USD will go down. That is an issue.
Yeah, but I again, I don't think that the running issue is like the price of running nodes is the issue there, because the number of nodes running is just the function of the collected fees.
I understand. I get that. I'm just saying.
And
if you
we
take
need to set this constant so that the network is sustainable. But with the Algorand expectations to make like 10 million per quarter, I don't know who is going to pay that.
if the USD price goes down, then what? Like how do you repeg it to the actual cost? Because say like
Then we decide that it's very low, for example, and we can somehow increase it, because all these banks or whatever, the projects will have lower lower price with basically running the infrastructure, because they run cheaper something else elsewhere.
no. Like you literally said, "Oh, we'll just change it." Like that is a huge, "Oh, we'll just change it." How do you decide when to,
Like
how
like
much to
in
change it by?
extreme situations, like if really in 1 year the USD price will collapse in like if there will be a Great Depression in the US, and the price in relation to euro will like, even this is not realistic. They will dump like 50x. Like,
I mean, aside from the USD, like literally, inflating, I'm saying the actual costs of running the hardware will go up. Like the actual electricity cost, the real cost in whatever currency, right? Measured against a basket of currencies, that cost goes up. And things like archival nodes, this is true. Like archival nodes are just going to become more and more and more expensive. And like everything will just become more expensive. Like it's not going to become less. And then you peg it to the USD, and the USD is now going down, right? That's a fucking issue.
so
It's
let's
not
not talk about
related to the
USD.
chain.
Let's talk about the gold index price.
The gold has nothing to do with algo. That's
No,
my
it
issue
has
with it.
to do with this inflation that you are saying. It's the
Yeah,
fix
you
for
could.
this
Yep.
inflation issue that you are referring to. Because in the gold price is expressed this inflation that all servers go up like 50x, which is not
Yeah,
going to happen in reality.
you could peg it to gold, but I think better is to peg it to algo. Or don't peg it, right? Like just let it be a fixed market based thing. So if the costs rise, the algo price should also be going up. You know what I'm saying? Like why do we have to rely on some other peg?
Because the projects which may be doing a lot of transactions on chain are not going to do it because they are scared that the price of algo will go up.
Okay, but they can hedge that risk. Like if we peg it to gold, they would have to hedge that risk too, because gold could collapse or it could go up. It's
Yeah, but
it's the same thing.
not so much as the algo. Like the Bitcoin did like 100,000x from the start, or from I don't know, some early days. But if algo would do this, like they are not going to be sustainable solutions on Algorand.
They could just in time like do this, right? Like if they have transactions, they could literally be buying the algo like right before they need it. That's one strategy. Or
But
you could actually hedge it, right? And you could buy, say, oh, we're going to do maybe 1 million transactions. Let's buy 100K algo, and then let's short 100K algo on perps. And then you're perfectly hedged, right?
and after
Your
you are
transaction
run
fees.
of these transactions, you can close the project, right? It's like it's not sustainable for them.
Can I just jump in real quick? So like I think we're spinning in a circle a little bit around this topic, but just to add, my take on it, I don't think we should try to peg algo to anything other than algo itself. Like, why go for gold? Why not go for Bitcoin in that case? More upside than gold. This is kind of, I don't think that's a discussion we need to have in this particular space.
Yeah, but we are not not setting the algo price to be the price of the gold or the
I mean, like,
Bitcoin, right?
if a project is, reliant on paying the fees, if they're like, high frequency project, they could, like what I would do, I would literally just run my own node, earn transaction fees and pay with that. Just buy a big enough bag of algo to, get enough transaction fees to cover your operating costs. But again, it all comes down to transaction fees right now that are paid to the node runners are not enough. So a business that would be a reasonable plan if you think about it for the long term. Buy algo for cheap and then just earn the yield to cover your rewards. But the problem is those rewards on running a node are negligible at the moment, and that's why the discussion about transaction fees actually originated, I believe.
Yeah, so in my idea, like I really, if you are going to increase the fees, let's do it in the way that the fees can go even down. Okay, because and it's, in my opinion, it's much better for to find a solution for some fixed price fee to some asset, either some inflationary asset or USDC inflated by 1.2%, for example, each year. But
I do appreciate all the conversation on this. I do want to, kind of move on though from the specific topic to one specific, a different topic. I want to get all of your takes on priority fees. So leave everything how it is, but then add a priority fee for transaction ordering. And this introduces MEV, right? So people can front run other transactions. They could do, all these sorts of transactions that they'd be willing to pay a higher fee to get to the front of the block, because then they can potentially make even more, through doing these actions. So it's essentially raising the total amount of fees that we could earn without touching that base fee. Yeah, Ludo, go ahead.
yeah, so front running in DeFi should be like really be not allowed, because it introduces like a lot of new risks for arbitrageurs and stuff like this, and this is very bad idea for front running like DeFi transactions. And I generally do not agree with this idea, because if you want to increase the fees, you need to have like scarcity, and scarcity of the space of submitting the transactions means that perhaps someone will decide that we will not allow like 10,000 transactions per second, but only 100 transactions per second, and you can fight for the higher network fees.
No.
Which is again bad.
I'm not talking about scarcity. I'm not talking about the network is congested and you pay a higher fee, because that's already there. We already have that. I'm specifically speaking about ordering the transactions. So you pay a higher fee and you get a higher rank in the block order, like the order of transactions within a block.
And you don't think that this will do a lot of mess in DeFi?
Of course, it introduces issues. Like, look at Solana, right? Solana has this. but it literally makes up 80% of all the fees there because there's a clear demand from the market that this is a good thing. Go look at DeFi over there. Has DeFi suffered because they have priority fees? Absolutely not.
But on Solana, you pay for the failed transactions, right? And if you will be doing like swap and then swap as a person, then and you do it in 2 transaction groups, then perhaps second transaction group will not proceed because some arbitrager just put there like a better price quote for the fee for just for little bit, and you are screwed. Like, this is very bad for DeFi.
I mean, you know, I guess that's your opinion, you know. I appreciate you sharing it. I just have I view it differently. Simon, go ahead.
Yeah, I kind of agree with Ludo here. Like just thinking back, you all probably remember when, Rug Ninja launched, right? And at some point when, who was it, Leo, I believe, decided to pretty much front run tokens bonding and then just dumping on the market, that kind of killed the project like for a couple of days until Greg kind of fixed it, right? So if we allow for, or block ordering or like front running transactions, we can say goodbye to a big deal of financial applications, I would say. Just, as a bank, as a broker or whoever, I don't think I would want to be using blockchain that allows this. Again, that's my opinion. But for the regular users, these priority fees mean absolutely nothing. If I just want to send some algos or, some token to my friend or to another wallet, I don't give a fuck if it takes, 3 seconds or if it takes, an extra block. It doesn't play a role. So we need to kind of decide, are we willing to alienate, a certain part of applications or DeFi usages when we introduce this? That's my take on it.
I just want to again put up the rebuttal of Solana. Solana has this, and they are not seeing an issue with DeFi. Like, they're seeing the complete opposite, actually, of what we're seeing. So that's just the rebuttal. Is like, we don't have this right now, and our DeFi is dying. They do have this, and their DeFi is thriving. So that is the rebuttal to that. But I do
it's
want to.
because of the marketing, right? It's not because of the protocol.
I mean, the marketing can only do so much, in my opinion. Like, we can debate that later. But I do want to get Greg's take because Simon said that Leo's front running of tokens ruined his platform for a few days. But I don't think that's even true. Like he's literally fucking front running tokens, and if nobody buys them, he gets fucked. So I mean, that's a perfect example of like, this is a market. People take risks, and allowing people to express themselves, right? That creates more transaction fees. So like, if I want this transaction to go through immediately, I should be able to pay more to do that. That's the whole idea behind it. It's
but
Greg,
immediately means that you basically
is your name
have
Greg?
scarcity in the block, right?
Greg Ludo? No, I'm not talking about scarcity in the block.
But why would transaction wouldn't go to the next block if there is no scarcity?
Because I want my transaction to go first in the block. You don't think people would pay for that?
No, why?
Because currently you can.
But why do you want to be first in the block?
To do MEV strategies, to front run, to ARB. Like, there are plenty of reasons to want to be first. Like, if there's an ARB opportunity, if there's a liquidation opportunity, right? You would pay big money to be able to submit that transaction and know it goes through. Like,
So
imagine you can make $100. Imagine you can make $100 on a liquidation. You would pay $99 to ensure that you get that liquidation, right? Like, and everybody would. And so that's the entire point. It's like, people should be able to express themselves on chain with fees and it do something. I mean, it's like it's a this is all opinions, but I appreciate you guys voicing your opinions, and I'm not trying. Yeah. Greg, please go, and then Govhat.
Yeah, sure. So the original discussion was that Leo's shenanigans stopped the activity on Rug Ninja, but that is not entirely true. It was a funny coincidence. It kind of looked this way because the overall market shut the bed and the price of algo went down. And whenever this happens, the volume on the chain also goes down. You can look at the algo chart together with the chart we have on beta vestige to see it like the volume that we have perfectly aligns with the price of algo. So it wasn't as much that that Leo was exploiting the system. It was that algo price went down and then less people wanted to trade, and that's why the interest kind of died down. Obviously, probably the shenanigans weren't helping with this, but I really don't think that this was the primary cause why the enthusiasm kind of died down, and to be honest, it was a fairly big issue with the smart contract itself. So it was not something I predicted, and I guess it needed to be fixed sooner or later anyway.
Yeah, totally. And just as another kind of added piece of fact is Pump Fun is the biggest, most successful, right, launchpad ever, and it prints money. Like in one day, it makes more than Algorand has made in its entire life in transaction fees. So just to put things in perspective, when we talk bad about these other chains, it's like they literally could give a fuck less what we think, because the current discrepancy. Govhat, what's the
I just wanted to make a point because somebody said something about front running being okay, but not being okay for traditional markets. But that's not true. High frequency traders, that is what they do. They just, instead of employing fees, they employ speed and access to the servers that engage in those trades, which is why premium real estate around the NASDAQ and New York Stock Exchange and the shortest distance you can get between one and the other. I mean, that happens. There's firms worth billions that are devoted just to doing that.
Yeah, so maybe I'll just respond to that. So I 100% agree that's the current system, but like if we're looking to evolve, banking or all these applications by moving them to the blockchain, I don't think just repeating, it's beneficial for the user to know that there is not some middleman there taking their cut. Like that would be a better solution. But obviously, it's an ideal scenario that doesn't necessarily live in reality.
Not all MEV is bad MEV. Like there are a lot of good things that happen too, like pricing markets efficiently, right? Like when you do a trade, you want your execution to be as good as possible. If you're buying algo on chain and right now it's trading on Coinbase for 20 cents, you do not want to buy it for 21 cents on chain, right? Like you want 20 cents. And how does that happen? Through arbitrators and bots and people that make fractions of a fraction of a penny off doing this, but they do it at scale. And so it's not all bad. Like in the case of a liquidation, for example, like if there's $100 liquidation and somebody is willing to pay a $99 fee to the network for them to make $1, who gets hurt there? Absolutely nobody. Like literally nobody. The chain makes more money. The liquidation happens instantly, keeping the protocol healthy. Like there's good MEV too. And just speaking like, oh, front running, sandwich attacks, like, yeah, they are bad too. And I agree. Like, you know, we see this on other chains, but like those other chains have this and they're a lot more, you know, they're doing better. So just,
Yeah, just to share a take on this. So, you know, from the marketing perspective, from the adoption perspective, and again, like, I'm not gonna say Solana, you know, is not successful with what they're doing, but, you know, if you hear about, you know, someone spending, let's say, $1,000 on fees because they fucked something up, or someone, you know, because, like, let's say, you know, someone front run them or whatever, like, you know, currently that can't happen on Algorand. You know, with introduction of this priority ordering or, you know, potential front running, this stuff can happen. So again, like, there are upsides and there are downsides. I just feel we're kind of inviting, you know, a lot of a downside as well.
yeah, Ludo, please.
Yeah, I think from the user perspective, when I do some swap, I don't want to do another swap if someone front run me, right? It's a pretty bad user experience, and I think we should improve the user experience as much as possible.
Front running doesn't mean that your swap would fail. It means that someone
It
would
may.
take. No,
Yes,
because
because I'm using the aggregator and I'm basically cutting the edge. And if I do it at exact time that someone else wants to do this execution, then the transaction will fail.
then that's a pretty shit MEV that someone has written. But if someone was skilled enough on this, the MEV should never make you fail the transaction, because that means the person that is sandwiching you doesn't make any money. So it's never really an issue.
Like,
Yeah,
when
a
I
lot
see
of this
some
stuff
quote,
could be handled. A lot of this stuff could be handled through, like, you know, the application. Like, so you setting your slippage to 0.5%, right? Like, if you put your swap through and it doesn't go through at 0.5% slippage, then your swap doesn't go through. And like,
yeah, but when I do,
I understand that that's bad UX, like, for a user. So then you can set your slippage higher and use, you know, a private mempool. We don't have these, but like on other chains, they have private mempools where you can submit your transaction to, and MEV bots can't see it. Right. So like, you're not broadcasting your transaction early for then MEV bots to be able to calculate, like, you know, oh, how do I fuck this person? We do have a legend up on the stage. Long time no see, sir. Great to see you.
Well, long time listener, first time caller. Thank you as always for hosting wonderful spaces. I was actually going to bring up kind of the topic that you were just introducing there, which is these shadow pools, and also the fact that I don't think that you can solve this at a protocol level, right? Like, as you move to a decentralized system, and I can be a validator myself, at some point I should be able to create the block and order the block any way that I want. There is no way for the protocol to say, no, you can't put that transaction in there in any particular ordering that you want. I'm the leader. I'm the validator for this block. Order my transactions however I want. If somebody wants to send me $99 to make sure that I put their transaction first so they can make $1, I'll take the $99 when it's my chance to produce that block. I don't think it can be solved at the protocol level.
So you're saying you essentially have. I guess what I say when I say add priority fees is more of like a client level thing, right? Like,
Sure,
you
but
need all the node runners to accept this ordering, even though the proposer can put the order in whatever they want.
right. So if everybody is running the reference client out there, the Algo D client, right, and everybody's producing blocks the way that the protocol says that they should, which is just when you see the transaction in your mempool, or I'm sorry, when you see the transaction on the network, you put it in your mempool, and you're just going to put it in that order. But if I modify the software, which is a non-trivial task, but not something that if you wanted to make money in this and do MEV, you would certainly be able to do and run a non-standard already fee somebody else paid on that.
Yeah. I think that's what we want, right? Or that and I shouldn't say that's what we want, but that is certainly an option that we're kind of floating here.
Yeah, good. I'm glad to hear it. I love this discussion. Again, really appreciate you putting the space together.
Absolutely. Yeah, it's so great to have you here. Ryan, give us like a 1 minute life update, because I think a lot of people miss you.
Aw, thanks very much. Yeah, in the past year, it's been a hell of an up and down here in the Kim Fox fam household. Been around the world and had some troubles along the way, but all things are looking up. I've been active in the Bitcoin space of late, trying to look at scaling options for Bitcoin. How do we build smart contracts and extended functionality into Bitcoin itself? A lot of that looks like L2s. A lot of it looks like roll-ups and zero knowledge proofs and all sorts of fun things that I enjoyed working on at Algorand as well. And what else? Summer is upon us, and as we all know in crypto, after the winter, when summer comes, let's make some money. So let's do it.
Awesome, man. Yeah. Great to hear that. Back on topic, Ludo, go ahead.
Yeah, also from this technological point of view, I think it's quite challenging for the node because of the CPU. Because if you um, try to reorder the transactions in the mempool, you need to basically rerun the transaction order for each transaction that you have in the mempool, right? So which can be quite difficult there, and it will increase quite heavily the CPU requirements for these nodes.
Sorry, I didn't catch if that was a question, but I don't have an answer. Simon?
Yeah, like for example, there was once the time that I asked that in the um, in the stateful smart contracts, stateless smart contracts, you could get some current block number or something like this, and this was denied exactly for this reason, because you cannot because of the mempools insertion and stuff like this.
Sorry, I'm still a little confused. Are you saying like each node sees like the transactions in a different order, so they're all submitting different, like I'm confused.
When new transactions comes to your node, and it has high fees, like you want to put it into the mempool, but actually in the mempool is already some transaction which prevents this, so you will be removing some transactions from the mempool, and this means that you will be running again all transactions, executions on all transactions in the mempools if they are still valid in the mempool.
I think the idea would just be to order them, no? Like, so the ones with priority fees go to the front?
No, because you want to do front running of AMM swaps, right? And it means that the other transaction will not go into the blockchain. You would not put it into the mempool if if this transaction would be already in the mempool.
Well, that might be true in a reference client, but if you want to modify the software and ignore that or take a transaction out of band, this is quite common in Bitcoin. Of course, they have substantially slower block times, minutes, not seconds or sub-seconds on some other blockchains. But the idea is that if you are able to observe the mempool, what the reference clients are seeing, you have the opportunity to then identify who the next block producer is and send them the transactions that you want to put first, and they can order that next block to include your block. I'm sorry, to include your transaction first, even though you observed a mempool that would have not allowed your transaction to originally be included in there. But if you out of band slipstream it in, the protocol would not deny it.
But still, this producer of the next block has to rerun all the mempool transactions that goes into the block, and this is CPU uh, con, consuming thing, right?
Yeah, that's very true. Like they obviously, as they have been assembling this block, they have been ensuring that any new transaction that's coming in would meet with what they have pending in their mempool. And if you were to send them something out of band, they would have to recalculate all of those transactions that would have a dependency on this first transaction, right? It wouldn't necessarily have to recompute all of them. And again, this would only be if you are modifying the reference client to be able to accommodate this. This is actually a lot of what the work that has gone into Monad, where they have re-implemented the EVM. So instead of doing sequential processing, they're doing dependency processing of individual transactions, looking at a dependency graph of who's participating in this transaction, either smart contracts or end user accounts, and ensuring that if there are no dependencies, that they can run them in parallel. And same thing could happen here if you wanted to re-architect the way that the AVM was the AVM was implemented in a non-reference client.
Simon, you go first, and then Leo, please.
Yeah, so just a question. Firstly, like if something can be implemented on the application level or the client level, I'm all for it. Like, that's already possible. Whoever wants to do it, they should do it. If they want to charge extra fees for, reordering transaction on their side, they should. I was against this being done on, on the blockchain, on the protocol level. However, and that's a question because I'm not entirely sure on the answer. You cannot guarantee that you'll be selected, right? That your block will be selected. So wouldn't you be just charging people for potentially, if you control a large amount of participating algos, maybe you basically can just guarantee them that you'll be selected, let's say 1 time in 3 attempts or something. I mean, that's not a very good service in my opinion, but market would tell.
Well, yeah, this is why I was going to saying everybody, you would want everybody running this because we don't know, at least on Algorand, who the next proposer is going to be. It's, 1 of 20 or something. So yeah, there's no way to say like, oh, this person for sure is going to propose the next block. And so I do think that creates some, yeah. I'm not sure, to be quite honest. Ryan, I think, has a much better understanding of that. I'm not familiar really with other ecosystems and how it works intricately, so I don't want to, speak out there. But yeah, please, Ryan.
Were there other hands up? I'm sorry, I don't want to step on anybody else's toes.
No, go ahead.
You go first. You
Okay.
go first.
All right. Well, I'll tell you a little bit about Bitcoin. So in Bitcoin, approximately a year ago, that's when the runes started. They launched, at block 420,000. Pretty nice, right? So they were there was a big gold rush, like and it all was, how fast can I get my transaction? How many fees am I willing to pay? In Bitcoin, you can actually do something that's called replace replaced by fee, and that will actually increase the amount of fees that are paid on that particular transaction. And if you don't format your transaction right, actually somebody could actually take your rune, pay for yours, and get it for a better price by paying a higher fee. The other thing that can happen is you can slipstream. So that means that you can contact a block producer directly. So on this particular block, when the runes were going to launch, everybody wanted to be the first one, have a low number, like have the low mint number, and people paid over $1 million to lots of different block producers, because there's, I don't know, 30, 50 potential ones, and they all had agreements escrowed up, like, if you produce the block, I will send you $1 million as long as you put my transaction first. And that's exactly what happened. So when the block was produced, transactions were ordered not by highest fee, but they were ordered by how people wanted to pay and how they slipstreamed them in. So again, it's a non-reference implementation of Bitcoin D in that case, but it does demonstrate that you can still have valid transactions on a network, but not follow the way that the reference implementation, their software was written.
Yeah, great. I think that was a fantastic explanation. Thank you so much for joining the space and instilling your knowledge to all of us. Just a big thank you from everyone.
Oh, you're welcome. Again, really happy to be here. It's good to see so many familiar faces out there in the audience and up here on stage. So yeah, good to see everyone.
Leo, please go.
Yes, good to see you again, Ryan. What I wanted to say is regarding priority fee based mempools. There's a lot of ways to look at it. I'm kind of torn between two sides of it. On the one hand, it would bring some volume in terms of trading, like arbitrage opportunities. On the other hand, like it kind of scales down what we consider Algorand like purpose for. So one of the things that distinguish us from a lot of other chains is that we don't allow things like that. But then that also has 2 points. Like one point is if you're a developer, you can be the first to do something, right? Regardless of what the fee is. But on the other side, like let's say you're trying to rush to buy a ticket and someone just snipes them all. On the other side, if you really want a ticket, you can submit a very high fee, and it doesn't matter if someone's faster than you, because within that block, you weren't the first transaction in the pool, but you paid an extra fee because you wanted a little more guarantee that you'd get, whatever asset or thing. Ludo mentioned something about like nodes also needing to have higher specs. I don't know how true that would be, but I would assume that is true to some degree. And then the last thing is AMMs. So I don't know how poised, not even AMMs, but all contracts right now, I'm not sure how poised everyone is to be prepared for higher fees, especially if they're hard coding logic regarding fees. So that's also tricky. Yeah.
Thank you, Leo. Appreciate those thoughts. I just want to get to everyone. I do have to run, everyone, so I'm so sorry, but I'm going to shut the space down at 1. But if, anybody wants to hop up, make any comments that you didn't get to make earlier, please do. And Orange, it's all you.
Yes, thank you. Thanks to everybody. This is an important discussion that we've been having and should be ongoing, and I'll try to make this quick. We've been spitballing some ideas in the Oranges Discord related to increasing transaction fees. And the one I'm going to present may seem way outside of the box, but it could have some integration with the MEV or front-running transactions. So the thought was, what about providing an Aura smart contract option or opt-in that allows a user to attach a juicing transaction to every send and every atomic swap that they initiate? It not only will double the fee revenue generation from that user, but the user will hardly notice the difference of the increase in fees and has the opportunity to win the token just by using the network on a regular basis. And of course, it increases TPS overall. So, you know, one thing to keep in mind is that Aura mining increased significantly during the halving in November. And of course, the first and second quarters of last year were off the charts. The next halving is in September this year. So yeah, it's up to you to decide whether or not I'm shilling this project, but I thought I'd at least add a different angle as it relates to what we do.
I definitely like Aura, but definitely like adding it as part of the Algorand protocol feels like possibly like picking a favorite, and it feels like probably you could just direct that extra, like if the goal is just to add an extra fee on every transaction, we could just boost the base transaction fee, right? And then it all goes to the validators, or at least 50% for now. But yeah, then it's like, you know, we're not picking this token which people have a large position in. And like I'm not shitting on Orange. Like I said, I'm a big fan of the project, and I think people should do it independently, you know, but probably not be forced into it by the base protocol. Like we should take as little opinion into the base protocol as possible.
Just to clarify, it could be offered as an option too on a smart contract, so that people aren't necessarily forced into doing it, but at least have an alternate way to potentially win the token through competitive juicing.
Yeah, I get what you're saying. I'm totally into that, like opt-in kind of thing, you know, based in like, you know, like a product or a protocol built on Algorand offering that. Yeah, I think that's totally cool. I do want to let some other people go, just because I'm up against kind of a hard stop here. Leo, I think first, and then Ludo.
Yeah. Oh, orange profile. I think that's cool. First of all, that's cool having a standard. Maybe like having a commission for projects to implement that standard. I was gonna. My main point was going to be Aura is a perfect example of a platform that would need to go back and scale for a transaction fee update greater than 20x right now, because the max fee you can submit in a juicing transaction is 20,000 microalgo. That's all. Thank you.
Thank you. Yeah, Ludo.
Yeah, I just wanted to mention one another argument, and it's that I believe that the mempool will be flooded by the invalid transactions by the arbitrageurs because of this, because they will compete with this price who gets this arbitrage opportunity, and this is another bad experience for the node, right? But it's just the argument. And thanks for hosting this space, and thanks for having me.
Yeah.
Thank you for coming.
Yep. Thanks again, John. Appreciate it. Really great to be here today. Good to see everybody.
Yeah, great to see you. I think I speak for everyone when I say that. You're always welcome here, Ryan. And yeah, thank you everybody else for participating, talking. We can keep the conversation going. Ludo, I want you to look into the Jito client on Solana and see how that works. I think that it'd be interesting to get your thoughts after you read about how it works there. And I mean that sincerely. I don't mean to be like, oh, you need to learn something. I think it'd be great to get everybody to look outside the ecosystem and see how things are working in other places, and then we bring that back and institute it on Algo and do it quickly. Like this should be, it's still
Yeah,
young.
but on Solana
Should
you
be
are paying for
experimental.
the failed transactions, right? So it's only the Algorand that you are not paying for failed transactions, and I hope that this narrative doesn't change. So yeah, just another point.
Well, yeah, no, I greatly appreciate you, Ludo, for participating. Means a lot that you guys do come up and participate, because otherwise it's pretty boring up here by myself. So I hope everybody has a good day. I'm sorry if I didn't see your request to get up here. But Twitter is pretty finicky. And I had people messaging me asking me why I wasn't accepting them, and I was accepting.
Hey, Marcin, thanks for the super chat, my friend. I appreciate that.
But everybody have a great day. Yeah. Bye, Smalgo.
Yeah, thanks for Frugal starting the space, because I noticed this space because of his stream.
Big shout out to Frugal. Appreciate you.
Yeah. Give me the shout out. Okay, looks like that is it. So thank you guys. I appreciate you joining now. A lot of stuff to talk about here. A lot of stuff to talk about. And Marcin, again, thanks for the super chat and for the membership. I appreciate that a lot. I'm not sure what AED is. I don't know what probably look that up, huh? Oh, United Arab Emirates. Oh, that's cool. Wow, neat. First time I ever got something from that, so that's really cool. Yeah, really, it's a really interesting discussion. Yeah, we're kind of done now with this. So, and thanks for Fisherman for hosting this. John from Non-Fungible Domains, also known as Traction, which is made by Transaction Labs. So very cool for that. Now, a lot of interesting stuff. Oh yes, Dubai currency. Marcin, are you in Dubai? That's really cool. I've been to Dubai. I liked it. I liked Dubai. Oops, I shouldn't do that. Keep going to my email. It's a bad idea. Yeah, so some things there. I will say I thought pegging it to US dollar is a bad idea. And what I wanted to talk about, I wish I had a way to. I gotta get OBS set up with my Microsoft Paint so I can do some Microsoft Paint on stream. What John referred to earlier on really early in the conversation, which is what he was trying to explain, is that your dollar goes down, and it doesn't matter what currency, by the way. It doesn't matter what currency. Let's see. Putting you on timeout. doesn't matter what currency. At $50, say we have sorry, I got a little discombobulated for a second there. So say someone offered you a contract. This is a good way to illustrate. This is called the dollar discount model. So say someone offered you a contract that would pay $1 per year every year forever. You might think, well, that's a really good deal, right? So the question is like, well, how much would that cost you? Right? How much is that going to cost you? Or how much would you pay for it? I should say. I'm losing my focus here a little bit. How much would you pay for that contract? It's going to pay $1 per year. There's no stipulations. It's just $1 every year. Well, it turns out if you do the dollar discounting model, you'll find it's worth probably about $50, and you wouldn't want to pay any more than $50. Now, Why would you not want to pay more than $50? Because every year that dollar is actually worth less. You're getting the dollar, but the dollar buys 2% less. And this works for every currency. It would be a different value depending on where you are and what currency it is and the rate of inflation. But every year you can figure that dollar is going to be worth about 2% less. And over about 50 years, it's worth so little, it's practically zero. And you might think like, well, does that really play out in real life though? Yeah, actually it does. Right now, like where I am, and I'm in a pretty low cost of living area. If I wanted to go buy breakfast, I'm paying over $20 now. That's crazy. That's crazy. There was a time not that long ago where you could get breakfast for like $5, $5-6. Dead serious. Where I live when I was a kid. And if you go back when my dad was a kid, you could get breakfast for under $1 at a lot of places. Now, you could definitely find places that were more expensive, but you see how much less $1 buys. Like if you had $1, you could probably go get yourself some food, right? In about, say, 50 years ago, you had $1, you can probably get yourself a hamburger somewhere. Or pretty darn close. You might not be going to the best place. You might be going to the Greasy Spoon Diner, but you'd be getting about $1. You could get probably a burger and fries for maybe $1. Maybe you wouldn't be able to get a shake or something. Now that's much more expensive. So it keeps going up every year. The Fed tries to manage it at 2%. So that's what he's referring to. Now, when you talk about if we put the fees in US dollar, you're going to be effectively making less every year. So you'd have to increase the prices. And in fact, most businesses, you'll see like over time, they increase prices to keep up with that inflation. And if you don't, like you're just falling behind. You're making less every year. So that's why the US dollar coin or pegging it to US dollar or really any asset. And someone said like, well, pegging it's a bad idea. Well, it's going to be pegged to something. Right now it's pegged to Algorand. Pegging it to gold would probably actually be better than pegging it to US dollar because at least over time it generally goes up in value. That's why the US dollar used to be pegged to gold. Let's see. So I did a little math. I kind of put that in the chat, but what I was talking about is so I thought it was interesting. Apparently the quarterly burn rate for the foundation is about 11 million. So that's 44 million per year that they're burning through. And that's a raw burn rate. So that means no governance rewards, no grants for anything. That's just raw burn rate. That's a lot. So I don't know how, right, you'd have to increase it. I mean, you'd have to, but then what? Then what are you gonna? So every day Algorand says, yeah, but you can peg it to USDC or USD stable value plus inflation, or peg it to gold. Well, that's my point. You're gonna peg it to some. If you do it that way, you got to peg it to something. You can peg it to gold, sure. That might be a better solution actually than. Let's see. We'll move this around a little bit. It might be a better solution than pegging it to USD. And then you're raising fees every year. So you could do that, but you're going to be raising fees every year to meet inflation. And then what do you do an assumed number? Like, the Fed usually tries to assume about 2% a year. That's what we do in our dollar discount model. But what about a year like we had with under the Biden administration when we were talking about, fees much higher, inflation much higher than that? Are you going to raise it based on the past year's inflation? So it's a challenge. I don't know. And then you're also not gaining the value of the increase of the coin, because if Algorand goes up, your fees are staying the same, which is, like I said, what HBAR does, which has its benefits, but then it has its downside. Like you still have to be sustainable. So regardless of how you peg it, you have to be concerned about that. But yeah, $44 million burn rate. Now, I've seen people say, like, don't increase the fees, just reduce expenses. I don't think the foundation can reduce its expenses enough for it to be sustainable. It has to increase revenue. Now, as pointed out, the price of the coin can also go up. That's legit. That's totally legit. The price of the coin. We hope, we all want that to go up, but I don't think there's an easy lever. Giga in the chat said he said Solana uses lending platforms to increase price, but we have a lending platform, so I didn't get feedback when I asked how exactly that works or how it's different from Folks Finance, because like Sui Network has SweLend, and that was, I assume that's what he was talking about. If you're in the chat, you know, if you want to answer that question, I appreciate that. And then the total algo that Foundation owns today, it would be worth about 300 million in USD. So I figured out, you know, on when we do retirement planning, we kind of figure out a 4% return or a withdrawal rate, which keeps the, you know, it takes into account inflation and also keeps the portfolio stable. That would yield about $12 million per year. So if you took the fees on top of that, you know, we're looking at, I don't know how much they're making in fees now. I know 2 years ago it was about 2 million, and that really wasn't enough. Excuse me. And then the factor, you know, the dramatic factor though is the price of Algorand. So it's going to increase over time. And what I think would make sense is when the prices are low, maybe you increase the fees a little bit, and then you can start ramping them down if the price of Algorand really shoots off. You know, we talked about like 1,000x scenario. Well, yeah, then you would probably like lower fees a lot in order to make it still sustainable, because if fees are, you know, and maybe I don't think you'd want to make it a parable at parity necessarily. You know, it might be like the foundation is bringing in a little more cash when the price is high. And then they also have to be careful because, you know, the foundation they're really careful about not wanting to be a common enterprise. So they're very careful not to talk about price. That creates a challenge too, I think. If you had 400 employees at salary of 100,000 per year, you would have the same expenses of the foundation. I think they should cut those expenses. Yeah, you're saying probably an average, because I'm sure Stacy makes quite a bit more than that. I'm sure John makes quite a bit more than that, but then other folks probably make less. Yeah, the price of algo has decreased dramatically over time. It's well, it's interesting, right? I'm sure they were making more in fees when it was up in the $2.50 range, and probably quite a bit less now. I do think they should cut expenses. Yeah, and they're going to have to at some point, I think. I think there will probably become a point where, you know, unless the price dramatically increases, so the fees increase, or they have another revenue source. They do have, we have to forget, there's also venture, which, you know, the Algorand actually invests in other projects, and so they have a equity stake. But we just saw Lofty just became profitable. And a really interesting thing to know that I don't know if there's a way to know, like, it'd be interesting to know what percentage of projects on Algorand are actually making a profit. Because I guess I was a little surprised. I thought Lofty, the way they had things set up, I thought they might be, and their fees are pretty high, by the way. You know, I don't know if you've ever looked at your transactions. They take a pretty good chunk on the way in and the way out. So, and they just became profitable. So, yeah, lots to think about. There's so much we could tear apart here. There was some discussion about like validator nodes, and I know Ludo, you know, you were involved in that. Beautiful Idiot asked, what are the operating costs that we need to cover? Well, the Algorand Foundation, you know, I kind of just went through this, but it's about 11 million per quarter as a burn rate. So I think so that's 44 million a year. I think that's pretty expensive, and I think it'd be good if we could drop that. I'm not sure what that would involve, but as the foundation spins off some of these functions where they're not the ones doing it, I hope that means that they'll start cutting it down. Marcin says Algorand Foundation should cut expenses and live from fees. Maybe this incentivizes them to work on the price and adoption. I mean, I definitely think they want that to go up now, and I think they definitely want adoption to go up, and I do think they should cut expenses. But I think right now, to do that, as far as I know, I have old data. I don't have the new data of how much they're bringing in on fees, but it was about 2 million 2 years ago. Yeah, you're welcome, Beautiful Idiot. You're welcome. That's his screen name. I'm not making fun of him or her. Actually, looks like a guy in the screen thing. Appreciate that. But it was about 2 million. So we go from 44 million to 2 million. That's some pretty dramatic cuts. And if you want it to grow, I don't think you can cut the foundation that much. You know, those two things are kind of at odds. So that's something important to keep in mind. 44 million does sound like a lot. Hopefully there's I mean, I think the goal would be to get to a point where the chain is kind of growing on its own and the machine is running and the foundation doesn't maybe have to turn the crank as much, so to speak, so they can spend less. And but what I want to know, and I don't know who could give me this answer. I really want to know what is the role of Algorand Tech. It used to be Algorand Inc. I don't know if that's the same. Algorand Tech and Algorand Foundation, because Algorand Foundation seems to be doing a lot of the technical stuff as well as all the management. So do we need Algorand Tech, or maybe those two things can merge? I mean, are there, I assume there's probably a lot of overlap there. And I don't know, we focus on the foundation, but is Algorand Technologies, are they, you know, what's their situation? How much are they spending? I don't really know. So yeah, there's a lot of factors to talk about that. Well, this is a pretty long stream, 2.5 hours, and I really do. Yeah. So Gigi says tech is more the protocol dev, but I see all these changes that like John Woods and the team are putting on the protocol dev. So do they really need to be separate? I just wonder about that. Oh, good point. So, and I explained this earlier, but I didn't explain this when I recapped it. He says, does that include consensus incentives? That is the 44 million a year I mentioned, that is a raw number. So that's no governance rewards. That's no incentives of any kind. That's just like staff and buildings and you know, what are base expenses basically. Algorand Tech at the moment are developing the source code. I see. Okay, I guess I see that. Do they need to be separate entities? Is that really important? Like, that's sort of what I wondered. Yeah, Marson says, I don't recall AT provided some transparency lately. I haven't seen anything from them, so I'd be curious to look at it. I don't know that they do that. Yeah, it's a lot. It's a big number. Gigi says that's what Stacy was discussing last space. Well, I remember, what specifically are you referring to now? We kind of jumped on a few different topics, but I covered that one too. Well, guys, I really got to get working on some other stuff. We were keen to start financial wherewithal to take over the protocol should that goal be the goal or necessary. Okay, I guess I didn't pick up on that, but I did have to, just like today's, you know, it was a really long space and I did have to jump off at certain points. So Algorand Foundation at the last Twitter space told she wants to take over the devs of Algorand source code and do the development at the, that's just what Gigi said too. So yeah, I mean, it kind of makes sense. At least you can consolidate some resources. It seems like, I mean, if you can combine those two, you're definitely going to have some shared expenses, or, you know, you're definitely going to save on some money there. So AT has never provided a report. Maybe Inc did a long time ago. Yeah. Yeah, I've never seen one either. And, you know, I've asked a few times and I have no idea. I have not ever seen, and this is an important point, I think. Maybe we'll close with this. I have not seen another blockchain provide a transparency report of any kind. So, you know, one of the things I mentioned, I think, is kind of, it's kind of like the cycling thing. You know, cycling famously had a reputation for having people who doped, but that's because they did more testing, so they found more people. And so everyone was like, oh, cyclists are just a bunch of dopers. It's like, well, yeah, because they're actually testing. It turned out when everybody started testing, they found it in all the sports. Yeah, the $50 million from the transparent. Oh, okay, I see. Says it was in preparation to take over and assist with the protocol and recruit the engineers. Oh, fair enough. Probably a good idea. All right, guys, I really appreciate you joining. I really got to get going. This was a lot. These spaces are going longer than I usually expect, and I did want to wrap up some stuff. Clarify they were not trying to buy Algorand Inc. They were preparing to propose to take over the protocol engineering. Yeah, well, I mean, then maybe they don't need them though, right? So in a way, it kind of is, I think. But yeah, I really gotta step off. So thanks so much, guys, for joining us today. I think it was a really interesting discussion. Not as spicy or interesting as the last one where we had Stacy and